Hey guys, this is Maxwell Fontaine, financial advisor with DFS Advisors. We are a wealth management firm located in Mooresville, North Carolina, and this is a abbreviated version of what small business owners, especially clients or prospects that come talk to us, what does retirement planning look like for them as an exit strategy, right? If you don't pay yourself properly or you don't structure yourself correctly, you cannot pick the proper vehicles and you're limited in what kind of vehicles you use to help you get to retirement successfully. And sometimes YouTube and TikTok and Instagram don't take ownership of what they say or might mislead you. What do we actually do and how can we help you going forward? Now, retirement planning could seem a bit complicated because you have Social Security, what's taxed, what's not taxed, how much am I going to get, how much will it even be there at the end of the day, right? Nobody knows on that side of it. Now, what's taxed, what's not taxed in terms of my retirement accounts? How much can I take out? How much do I need to take out? What the heck are RMDs? Right? A lot of this jargon and a lot of this what's taxed, what's not taxed causes a lot of different confusion and makes people not feel so confident when it comes to their retirement. So what we want to do today is help you move from the not so confident over to the very confident by giving you guys a roadmap, right? 80/20 principle, 80% of the results are driven by the top 20% of producers, but 80% of those people are fighting over that 20% of the production or revenue or things like that. So, they're fighting so much, it doesn't lead them to be very, very confident in their retirement planning. Or they may not just be asking questions, they don't know what to ask, or they're asking the different people that may not really be speaking that clearly. So they're just staying inside of that not so confident or somewhat confident bucket. What we want to do today is move you from that 80% over to the 20%. And if there's one thing that you take from this presentation, it's that how much money can you move from your right hand over to your left hand, take a tax benefit today, and still save money for your retirement tomorrow. Again, how much money can you move from your right hand to your left hand, get a tax benefit today, and still save money for your retirement tomorrow? Now, hitting that first piece of the agenda, okay, is going to be structure and pay. Are you structuring yourself properly? Any client that comes in and sits with me, especially if they are an active participant in their business, it's not like a holding company for real estate or something like that. We would definitely encourage you to be a S corp. The reason being is two different things. You have two flows and you need a reasonable wage. The two flows are going to be because you're wearing a employer and an employee hat, right? So you get to benefit from both of those. But now since you're wearing an employee hat, are you paying yourself a reasonable wage as an employee? What that means in the eyes of the IRS is if I sit down and I look around at my peers and say, okay, well, I'm doing a bunch of this, whatever work. What are they getting paid for doing the similar or same job as I am? How much money is coming into the business? And then pay myself accordingly to my peers. That's what they mean. So it's very flexible, it's very fluid, it's very gray and messy. And because of that, it gives people a lot of liberties to maybe underpay themselves and maybe even overpay themselves, right? I mean, it happens, but you have to make sure that you're sitting down and paying yourself a reasonable wage. What the IRS really cares about is that are you paying yourself enough? Okay. And I'll show you on the next slide what enough might look like and why they care so much. But a simple breakdown what those two hats might look like is what's on the screen right now. And I definitely would encourage you guys to take a screenshot of this, just that way you guys can listen also, which is, you're wearing the employer and the employee hat. As an employee, you have a W-2 salary. And more of the times than not, most people have if you have a corporate job that you're putting money into before you actually get your paycheck, right? Every 2 weeks or every month or whatever that might look like for you. So if we set ourselves up for success early, yes, you can go ahead and contribute as an employee to a 401k plan or to a retirement plan within your own business. Now, as an employer, you get the exact same benefit, right? You get the capital distribution. You can send money out to the employee, take money out of the business. And you also have profit sharing. Profit sharing right now is just a catch-all word. You'll see why in a little bit. How much money are you able to stash away to benefit the employee, possibly tax deferred? All right, that is huge. That is huge. That right there can shape everything inside of your tax picture moving forward, because this is what it might look like for pretty much anybody filing taxes if you're in business for yourself, right? You have your W-2 wage, you're saving money also inside of your retirement account or 401k contributions as an employee. And then as an employer, how much money are you able to stash away into your profit sharing sleeve and capital distribution sleeves? Everybody's paying the same federal and state except for the W-2 employee side. You have that self-employment tax that's coming out on that side of it, which is 15.3%. That's FICA, that's Social Security and Medicare. All right. How much money are you contributing to it on a annual basis, monthly basis, or what have you? Now, it's not quite 15.3% because you have some kind of tax deduction on the half that the employer is paying. But again, that's you. But it's depending on how much money you're making, it may not be all that significant. So still budget around 15% on that side of things for yourself on top of your state, on top of your federal. Now, the answer is no. Every time I talk to clients about this or run them through something like this, their question is, how much can I actually pay myself in capital distribution? Why don't I just pay myself 100% in that and save 15.3%? Right? My answer is no all the time, because the headache of a audit from the IRS, the back taxes that you may or may not owe, the penalties, fees, and all of these different things might cost you more of a headache with time and having your accountant, do all these things, go through whatever process, than just paying it outright and planning for it. There's one thing I will say, I promise you will increase your probability of being audited if you overpay yourself in capital distributions and underpay yourself in a W-2 wage for whatever job that you are doing. Now, just moving forward for the 4 steps for retirement success, what kind of process do we need to look for in this, right? We have the savings vehicles, choosing the right ones or just choosing the best ones available to you, depending on what tier you are in terms of income. Are you starting early? Because I can't contribute back in 2019, it's past, right? Starting today is the best time. Starting yesterday was even better. But let's just start where we are and let's not push it off, because a lot of people move the goalposts, which is, okay, well, on the next one or on the later date or at such and such time. And it just never actually gets to it. So we want to make sure that we're starting as early as we can. And when we do start, are we saving at a certain rate and increasing that rate over time, right? We may be making more and more money every single year in our business, but our lifestyle hopefully isn't inflating faster than that number. So therefore, we should be saving at a higher rate every single year. And also seek advice, guys. YouTube, Instagram, and TikTok is great, and it has a lot of really good information. It has also a lot of harmful information. So talk to somebody who will take ownership over what they're saying. We are licensed, we are registered. Just talk to somebody and just get some clarity before you go ahead and do something. If nothing else, just to have a second set of eyes on it. But going ahead and choosing your retirement vehicles, employer-sponsored plans are huge. Okay. The next one is going to be the cash balance plan. And that bullet point, not many people know what that kind of account actually is. All right. That is going to be a very, very important one. And then number 3 is the IRA, whether it's traditional or Roth options. That's the most popular, most common kind of accounts that people use. So I will still touch on it, but it is third only because of how much money you can put into it relative to the other 2 accounts above it, right? That's the only reason. That's the only reason. Now, the solo 401ks or the I-401ks, they do have a Roth component, just like your traditional and Roth IRAs. But for the year 2025, you could put away $23,500, which is a pretty good number. And that's just from the employee side of it. The employer can put up to the difference of the $70,000, right? So the employee says, hey, I'm going to put in 23.5. The top cap right now for people under 50 is 70. That's a 40 something thousand dollar difference. That employer can put up to $70,000 from that 23.5 into that account. Now, if you're over 50, you have different catch-up provisions, but overall, you can see the strength of this kind of account, especially when you compare it to another very, very popular account, which is a SEP IRA or simple IRA plans. Now, on the left-hand side, you're going to see that the W-2 compensation is possibly different, right? You may be making 50, 150, 200,000 just for examples. And then moving over, you can see the individual 401ks or the SEP IRAs. How much money are you able to put into those accounts at that given level of income? The reason we like the solo 401k so much and why I will recommend it to a majority of my clients or prospects is because you don't need to make as much money to put in the same amount of money away on your behalf. When you're making 50 grand, you have the benefit of having two different people putting money into the same account. You have the employee and the employer utilize it and benefit from it. Only employer driven. You're only adding money in as an employer. So this is really why I'll say, okay, if we are set up as a solo we are having an S corp set up for ourselves. Why are we going to say a solo 401k? Cut and dry. You don't need to make as much money to contribute the most. And that's really the main reason. The secondary reason is that it can combine with other accounts without changing how much you can contribute to them. Right. And that's where the cash balance plan or cash balance pension comes in. So if we think of this account back in the day, we have Ford, GM, Chrysler, or state workers or things like that their company or employer was putting money away on their behalf, guaranteeing after you retire, after 20, 30, 40 years of service, we will give you a certain amount of income for the rest of your life. And if you passed away, we could pay out your spouse. Those kind of started to fade away. It got very, very expensive, but your parents and grandparents love them. So as an employer, you're your own employer. Why don't you benefit your employee by creating an account for them that has the exact same rules? This account is only employer driven. It hinges itself off of two things: your age and your wage of the employee. How old are they and how much are you paying them on a W-2 salary? Whatever that math works out to, you can contribute that new amount over into this plan on their behalf for the employer. It's tax deferred, so the company itself is getting a beneficial tax treatment and the employee is getting some extra money added into their retirement plan. Sounds like a win-win, right? You can go ahead and put money away for every employee, but if you guys are an S corp working just for yourself, you're only benefiting you. So how does it actually work, right? Think of maybe a CD. The CD says I'm going to pay 4%. And this is where the differences in this account come in. I really do not encourage you guys to open up this account by yourself. You really should have somebody walking you through it, because that piece right there on an annual basis can be very, 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 very confusing. All right. Now, what you can invest in to make sure that you're abiding by these rules is anything, as long as you're the one setting the rules, right? You're the employer. You say what you're allowing to do. You're working with an advisor. You're letting us decide for you, especially when we have discretion over certain investments, right? What are we able to put money in order to abide by the rules that we set before? And yes, we can combine it with a solo 401k. No, we cannot combine it with a SEP. So that's just another reason as to why we really do encourage people to have a solo 401k over a SEP. And when we hold them together, remember what I was saying before, age and wage. How old is the client? Or I'm sorry, how old is the employee? And then how much money are we paying them? When we hold these things together, we really get to see the strength and power of moving money from our right hand to our left hand to get a tax deduction today to save money for retirement tomorrow. A 34-year-old can save up to $151,000 for retirement and get a tax deduction on all that money. which now translates to $68,000 potentially in tax savings. That's a ton of deductions that you no longer have to chase for. You don't have to hound anybody down and say, I need this tax deduction. Rack your brain at the register. Do I say that this is a business expense or a personal expense, or I'm going to go on vacation and all of this other stuff? You're giving money away by doing that just to save 30, 40 cents maybe. Keep the dollar and still get a benefit of 30 or 40 cents. That's all this is teaching you guys. Right now, next, the very, very common, most people know about this, is the IRAs, individual retirement accounts. So these accounts are very, very popular because of how easy they are to open. Right? You can go absolutely anywhere and open this. You can invest in anything on the stock market. The universe is huge for these kind of accounts because you have an old 401k, you can roll that into this and then do everything yourself, right? You're not limited to just that small menu on a 401k that a corporate employer may give you. Now, the reason that this is last, like I was sharing, is because you have only $7,000 that you can put into this account every single year per person. So if you're married and maybe your spouse isn't working, you may be able to contribute on behalf of that spouse. But this also has income limits, right? So a lot of people say, hey, have a Roth IRA, you never pay taxes again. That's true. But if you're making too much money, you may not be able to put money directly into a Roth, which is now a backdoor Roth. We can get into that later, but that's a little bit of a complicated strategy for some people, and it's perfectly fine. If you're making that much money, that is a very good problem. All right. Now, also, what do we actually do in wealth management? Right. A lot of times I'll schedule appointments from Facebook or LinkedIn and, hey, man, what do you actually do in wealth management? What does working with you guys actually look like? So when you work with us, you'll get a financial plan no matter what, right? You sign on as a client. This is going to be our first step. The reason being is that we have no real relational equity to be able to tell you what to do with your money, right? You have certain reasons. People have dealt with a lot of different things across the board as to why they do what they do, how they feel about the money, where have they gone, where are they going to go. And imagine somebody walking down the street and telling you what to do with your money. You're going to be like, dude, get out of my face, right? Like, you don't know me. This is our way of getting to know you, right? We have to know what your hopes and dreams are. What do you actually want to do? If you close your eyes and say, what are our goals and ambitions? We can put them down here, calculate out where you have been in terms of your finances. If you want to budget it out, we can go ahead and see what that is. And then how do we grow that going forward? But put it out on paper, hand it to you and say, this is who you are. This is the likelihood of success to achieve every single thing that you want to achieve. We package that together with what you've done so far on the analytical side, right? Investments and everything like that, right? You guys don't need to read this. This is a complete snooze fest. But Aaron and Aaron's the managing partner of the firm. Him and I run these tests nonstop for people, right? We just package it all up together and say, hey, these are our recommendations. This is who you are on paper in terms of where you are financially, the likelihood of all of your dreams and ambitions and everything like that, ending the day when that day does come, right? That we're able to end with some money at the end of it and hand that down to your kids. This is where investment wise we are right now. This is how much risk we're taking. Where can we possibly improve for whatever goals and dreams and risk that you're willing to take? And we hand it back to you. You have two choices at this point. You want the DIY option, right? Like, think of Home Depot. You come in, get the pieces that you want and leave and go build it yourself. Or we have the white glove service, which is we build this all out for you. We hand it to you. These are, the exact same thing, but we implement it all for you. We will open up the accounts. We'll trade it for you. We will have complete ownership of this relationship, what's going on in the account. And we'll talk to you on an ongoing basis whenever you need for what we call as a wrap fee. It's AUM, whatever money we're in charge of, that's what the fee is going to be based on, right? And obviously the planning and all that stuff comes with it. But if you guys do have any questions, scan the QR code or shoot me a text, email, schedule some time with me, and we'll walk through your situation specifically. Have a blessed one.